issues, but we're going to jump right in to this webinar session that we have today. This is our first session for our winter series for 2024. Some of you probably joined our fall session where we had 3 sessions, September, October, and November. And we recorded those and did send out those recordings last year. Today's topic is talking about what are accounts receivables doing to your bottom line. And what I'd like to do is just do a quick intro myself and our guest today. I'm going to let her introduce herself, Camille Simpkins. I'll let her introduce herself. But some of you know, my name is Lawrence Aldrich. I'm the Senior Business Development Manager here at Capital Good Fund. I'm responsible for bringing in all of our partnerships that we have on the specialty lending side, which includes immigration. So I kind of work with all of our partner firms and getting them all set up to submit loans, refer loans to Capital Good Fund. Camille, you want to just give a quick intro?
Absolutely, and my apologies, everyone. My name is Camille Simpkins, and I currently serve as a relationship manager for an organization called the Philadelphia Industrial Development Corporation. We are designated as a community development financial institution. I have over 25 years experience in financial services, and I'm happy to be here with you today to talk about your bottom line.
Beautiful. Thank you so much. So, Camille didn't mention, but I will. Camille and I worked together at a financial institution by the name of Santander Bank. Back in the good old days, I like to joke around and say when banking was banking. And I always say that I'm a recovering banker, but Camille was one of my old colleagues that I respected dearly, and I think she will definitely have a lot to say as it relates to your bottom line. Now, Camille, as you know, we are a nonprofit lender, so we're not a traditional lender, we're not a bank, we're not a credit union, nor are attorneys or our partner firms are a bank or a credit union. But what happens, because immigration attorneys are such, how should I say, I don't want to call them diehards, but passionate people about what they're doing and trying to help as many families and clients as possible with their immigration status here in the U.S. What happens is they start to, if a client doesn't have all of the immigration costs up front, a number of firms offer payment plans, right, where the client could put down a percentage of the overall cost of the case and then pay over 6, 12, maybe 18-month period, right? So then the attorney starts to kind of work on the case. So can you share with us just, from your experience as a banker, how that can have a negative impact on bottom line or cash flow for some of our partners? And now keep in mind, most of our partner firms are solo practitioners or, have maybe 4, 5, 6, 7 employees. But when they start putting a lot of cash on the line and they don't charge interest, they can't. Can you just share with our audience, what kind of impact that can have on the firm as a whole based on your experience?
Absolutely. I think for us, and Lawrence mentioned earlier that we're recovering bankers. So I think first to explain what account receivables are in general terms. So when you think about accounts receivable, of course, they are the funds that your clients owe to your firm for the service that you're providing. And then the total value of those services are then listed on your balance sheet as current assets. And it's going to include the invoices that clients owe you for work that's being performed for the course of that period of time. So I know with the work that you do, it comes in stages, and with the first stage being applying for the green card. Now, it is important to understand that, especially as a single practitioner firm, that assets are important to you because it is the foundation for wealth. Now, you probably are providing a bill to your clients after either providing the service or in the process of providing the service. Yes, it's a mutually agreed upon terms. Invoice payment is structured, during the time that you sit down with your company. However, you may find yourself in situations where a deposit is made, you've rendered the service, and you may not have received payment against those agreed upon terms. But you are still responsible for other payment responsibilities. So now it ties into your accounts payable. It is important for you to really understand your bottom line. And you want to have assets on your balance sheet that are guaranteed. So from a traditional bank standpoint, they're looking at up to 90 days of account receivable. Anything over 90 days, a traditional bank or a traditional lender are going to assume that those payments aren't going to be made. In the case with a non-traditional lender, such as Capital Good Fund, they're in a position to be able to look at opportunities for your clients to be able to provide them with financing to support your bottom line. Because once you hit that net 90 or you pass that 90, it's very well possible that you're not going to get paid for it. But as a single practitioner firm, that is the infrastructure for your business. Accounts receivable pretty much is the engine for which now you're paying your vendors, you're paying other firms that you have partnered with in terms of the goods and services that you're providing to your client. So imagine looking at your liabilities and your assets, and your liabilities outweigh your assets because those outstanding invoices that you have are not being paid. So you always want to put yourself in a position where you can guarantee a net 30, a net 60, or even a net 90. You want to put yourself in a position where as soon as you render the service, you're being paid for it, so that you can move on to the next client, and so that you find yourself in a better position to pay your accounts payable. Now, in the beginning, a client is going to agree to pay based on the terms and conditions that you set forth. But if you provide them with a service well beyond what they expected, and there's still an outstanding balance, you want to believe that that payment is going to be made. But what happens if it's not? So again, your business finds itself having to secure payment in order to ensure that your bottom line remains positive, in order to ensure that both your accounts receivable and your accounts payable align with each other. They almost operate as a yin and yang, the assets versus liabilities. But of course, as the money comes in, the money goes back out. But you want to find yourself in a position where, yes, as the money is going out, that money is coming back in. And I hope that kind of simplifies the process. Oh, Lawrence, you're on mute.
We're very technically challenged here. So thank you very much. I appreciate that. So you mentioned And hopefully everyone on the call is taking copious notes and kind of followed what you were saying as it relates to, receiving funds, not extending payments over a long period of time. And everyone on the call, this is not a commercial for Capital Good Fund. It is not. But a number of you are our partners that are submitting loans to us currently and understand the benefit of getting funds up front if a loan is approved. And 6 out of every 10 loans are approved, given the month here at Capital Good Fund and the volumes. 6 out of every 10 loans that we receive from you, our partners, are approved. So as you know, when we close a loan, we fund the government, USCIS filing fees, and attorney fees directly into your account. So let's talk a little bit about, trying to hone in on getting the monies up front, that will help the firm of Camille, and why that is important, and we understand, we would love to approve 100% of 110 out of 10 deals that come in, but that's not realistic because we're not FICO score driven. We take more of a holistic approach by looking at bank statements. But the key for our partners and our smaller solo practitioners and others to manage that balance, is important to try to get those funds up front. And I like to say we're an option, it won't fit for every one of your clients. You'll have clients that will, one, have all of the money available and pay. Two, will tell you, I'll come back when I have the funds, and the likelihood of them coming back to see you, slim to none. Or 3, you have a payment plan arrangement, that first stage of the process is done, and then you don't hear from them again, okay? And now you have these receivables that aren't doing anything for you, And from a banking perspective, 90 days, all right, anything above that, that's not helping you, it's not doing anything for you. So can you just talk a little bit more about the importance of trying to collect everything up front, and how that can have an impact on their bottom line?
Absolutely. So thinking about the workforce or your workforce and the responsibilities that your firm currently has. So once your firm delivers a service to the client, who is identified as your accounts receivable team? Are you that team? So you invoice the customer and you record the invoice amount. And yes, that becomes an account receivable, noting the terms and conditions that you've agreed upon. Of course, if the client pays as agreed, then you're in a great position because now you're recording the payment as a deposit. The account is no longer, accounts receivable. You don't have to worry about becoming the collection team. Now, you may employ an accounting or finance software, and it can support being able to automatically email the customer, if the invoice is past due, you're requiring immediate payment. But do you have the time to support or to create or to become the collection team? So now you're adding to your bottom line, because if you have to take on the responsibility of an accounting and a finance software, then it's going to increase your overhead. But if you find yourself in a position to create options for your clients, you're growing the relationship one client at a time. And I would imagine that within the segment in which you are supporting immigrants, a lot of your referrals are word of mouth. Imagine the opportunity to grow your business because you have clients that are stating, the law firm provided me with options towards making payment, options towards obtaining my green card, options towards creating sustainability and creating wealth within their family, while all the while taking away from you not only being the attorney, but also becoming the collections team. So if you're providing them with options where you've identified the varying phases and stages of which you're going to be working with them, and then you provide that option towards having a loan option, well, you're getting paid immediately. So it stands to reason that it's a viable asset versus it being a detriment and it becoming a liability. Because then at some point you'll take a step back and you'll have to decide how many more clients can we provide impact without ensuring that we are not providing a negative impact to our bottom line. So if you can look for and partner with an organization that gives you the ability to be able to extend terms and conditions that work not only for your client, but that work for you. Of course, there's a part of me that has that banking hat. So again, anything that is on your balance sheet that is well past 90 days, it's not going to be included in your debt service coverage. Because what will ultimately happen is if you find yourself not being able to meet your account payable obligation, then you yourself are going to be looking for a short-term loan option or potentially a long-term loan option and the terms and conditions may not very well work to your benefit because you have account receivables that are 120 days, 180 days. So to avoid a traditional bank saying no to you, it's a win-win for both you and your client to partner with a non-traditional lender that can provide support and being able to go through the varying stages of the immigration process. And I use the word impact a lot because the work that you're doing is so important. But you want to be able to continue to do that important work. And you don't want it to become a pro bono opportunity because when you look at the accounts receivable past 90 days, you have to define it as pro bono work. So you really want to look for the ability and the options to be able to extend generous terms through a partnership. You're going to continue to grow the relationships. You're going to continue to grow your bottom line. You're going to have a positive balance sheet. As you grow the business in this particular segment, it affords you the opportunity to have additional capital to maybe use towards adding to your workforce, additional capital to be able to add to your client base, additional capital so that you can employ additional team members so that you're not the AR and collections team. So you want to be able to focus on the work at hand and not focus on becoming the collections team. I think that's the greatest gift of having acceptable terms. And not only that, the options that are afforded to you extends your work. So bilingual team members are generally available throughout, your community development financial institutions. So it would just become an extension of your work. So we can provide you with the services needed so that you can receive all the benefits of having a green card. But let me introduce you to our partner who can support the process for you. Because not only do they have fear of the varying stages that you're taking them through, they have fear of how are they going to pay for it. And you don't want to fear that when you're doing your books quarter over quarter, that you're looking at a negative net profit versus it being a positive net profit. And I think that's the most important aspect of being able to provide options for your clients. You're also providing a more positive turnover ratio for you as well. It becomes a debt turnover for you, pretty much. So I think that's the key to understanding there are viable options, generous options, terms and conditions that would support over, a 4-year term. You're receiving payment upfront. So the idea of having net 30 is possible. Even if you decide that you still want to have a down payment model, and then, once the green card and other aspects of that relationship are delivered upon, then another 50%. But knowing that the capital is available for your customers would increase your bottom line, allow for you to turn over debt quickly, and allow for you to concentrate on the impact that you're having in their lives versus the negative impact that you could be having in your life. And I think that's the key to really understanding accounts receivable.
Yes, thank you, Camille. Thank you so much. So at this time, I am going to give everyone an opportunity to come up to ask a question. If you have a question, no question is off limits. Just shoot away, unmute the mic or put it in the chat. So why don't you guys start thinking about your questions? But I'd like to just talk about a few things that Camille mentioned. Word of mouth, very important, Camille. This business is definitely a referral business, word of mouth. Another thing that our partners and a lot of these immigration firms across the country are using heavily social media, Instagram, Facebook. So immigration is federal law. So we can have a partner in Philadelphia where we just started lending in Pennsylvania. We can have an attorney in Philadelphia that will have a client in Texas. And they might have been introduced to that client, word of mouth, or through their social media platform, Instagram, Facebook, so on and so forth. And TikTok. I'm here. TikTok is pretty good in the immigration space as well. And the other thing I'd like to mention that Camille, you really honed in on was, the cost involved in processing the payables, the accounts receivables, putting someone on a payment plan, right? And then having to make those calls to collect, if we can, have an impact on that cost and reducing that cost and freeing up those FTEs, those bodies in the firm to do other things, work on the case or what have you, or do more inbound type of solicitations to bring more clients to the table, then it's definitely a win-win. So I will get off my soapbox now and open it up for questions. And a hand is raised. Seth, Attorney Ledoux.
Hello.
Go right ahead.
How you doing? This is Seth Adiobo speaking. Yeah, I've used you guys before. It's been helpful. My question is, with some of the clientele who work off the books, what is sort of exactly what you need from them to be a viable candidate?
Beautiful. Great question. And I want our Director of Credit, Kyle Flavin, if we could unmute Kyle, I want him to chime in as well. I like to say, as a recovering banker, we need to follow the money. So if somebody is working under the table, okay, that money has to show up in an account somewhere, some bank account. And as you know, attorney, we need 3 months worth of bank statements. That's all we need for immigration loan to start here at Capital Good Fund to get into underwriting, right? So if they're getting under the table, we're not concerned about that as long as it's showing up in an account. The other thing, and Camille, I think you're gonna chuckle on this one. We might request a letter from an employer. Now, a lot of those employers don't really want to get involved. We don't report to ICE. We don't report to anyone. We just need a letter stating that, Camille Simpkins works for me or is a carpenter or a day laborer and makes $500 a week, and sign it. And that could be on a piece of paper. It doesn't have to be on letterhead. We would accept that. Okay. So Kyle, would you like to add a little bit more?
Sure, and thank you, Lawrence, because I think you guys can hear me too, right? I know I'm in here twice. You can hear me? Awesome. No, you said it, Lawrence. Taking us back to the first webinar, I think one thing we talked about, one unique aspect of our underwriting approach is that we pride ourselves in doing our best to meet the client where they're at. So along those lines, we certainly will go that route with self-employment income. But like Lawrence said, ideally, there's some sort of paper trail that can be established, whether it's in banking history, whether it's maybe through, receipts and things like that, that the applicant's earning. But yeah, ideally we have some sort of way to trace it back, and it's all going to be relative to the risk of the application also, I would say, and the different factors at play.
Thank you. I hope that helps, attorney. Any other questions? Yes. Maria Lozano.
Good morning.
Good morning.
Thank you for what you do, because in the past we tried to do something similar with other companies and it never worked out. And I guess the loans that we got gotten for our clients, the highest number has been with you than ever. My question is a little bit of follow-up from the prior one. So if a client doesn't have pay stubs because they're working, getting cash pay, so this potential employment letter will replace will suffice the lack of pay stubs?
Correct. That would generally suffice. Back to Lawrence's point, ideally there's some sort of paper trail, cash trail in the bank account that it can be kind of established against. But generally speaking, an employment letter would suffice in place of pay stubs. Okay,
so we had some applicants, they don't have social security number. I mean, I haven't done the loans myself in the last 6 months because somebody at the office is doing that. But in the past, we will send a co-applicant in those scenarios. Do you still do the same thing today when they don't have a social security number? Somebody, a friend or family member, can co-apply with them?
That might be to Roxana, but yes, we'll work with applicants that have an ITIN, a social security number, neither. They'd even be eligible to apply on their own, even if they have no SSN or ITIN. But maybe in many cases, a co-applicant would help their chances for approval if they don't have a credit history or some other things like that. But yeah, they're eligible even on their own. May encourage a co-applicant, especially if they have one available. It's likely to improve their chances for approval.
But because what I try normally to do is filter from the very beginning. So we send you people that meet the basic requirements at least. So no social, it will by default require a co-applicant, or just approve people without co-applicant and no social?
No, they would be eligible even without a social to apply on their own. Russ, I don't know if you have anything to add here, but yeah, they would be eligible with no social, an ITIN, or a social. For immigration only, that's the only product that we're able to accommodate, no SSN.
Okay, great. So as long as they can help with the bank statements and showing the flow, the income somehow, that would be the main point to prove here.
Exactly. We've approved a large handful of applicants with no social security number who, kind of bring us back to that first webinar, display an ability to repay. Their bank account shows sufficient balances relative to the payment. And they display some sort of willingness to repay. They may have recurring bills coming out of their account. They may have some credit history. But if they check those two boxes, even if they have no SSN, we've approved many of those clients over the years. I would definitely say.
That's great. And my last question I know you are operating with residents in 11 states now. Are you gonna continue expanding to other states? Anything that we can see soon? Just because we're in Texas, but we have clients that live in other states, and sometimes that's an issue. They want to apply, but they are not part of the states. And so just wondering.
Yes, that is the game plan. I think up for us next is probably going to be the Maryland, DC, Virginia area, I believe. But it's incumbent upon funding. You know, we have to kind of go with the money. We have to follow the money as well. So wherever we can get the funding to get our licensing, because there's a cost to get licensed in each one of the states that we go into. So I think that's up next. But we will keep you posted when we get more information on that.
Thank you.
Lawrence,
Yeah.
I'm sorry. I just wanted to add a little bit to what Maria was talking about earlier. Sorry, you guys can't see my name, but I'm Roxana. I'm the Director of Origination. I just also wanted to make you aware that as we receive applications and we're gathering intake documents, we're doing the best we can to also, you know, prepare the client for the process. As you are all aware, we share immigration checklist ahead of time so that you and the client can review it together. But we're also doing things like, you know, giving them an estimated monthly payment so they can get an idea of how much they would be paying. You know, sometimes if we notice that they're reporting a low income, we'll talk to them about, you know, planning to have a co-applicant just in case, perhaps someone who has an established credit score. And, you know, every client is different. Some clients have really strong income and they don't have any credit. Other clients have, you know, moderate income, but then they have really good credit. So it really depends on the situation. That's why we always say it's a case by case. It's very hard to generalize the guidelines. But we do our best to kind of, you know, prepare. Tell me, hey, I have these pay stubs sitting right here. Do you want me to send them over? Well, like, yeah, like send it over. We'll have it in the file for the underwriting team to review it ahead of time. That way they can see the full picture. So we try our best to, you know, to get the file ready for the evaluation team. That's why we're always encouraging clients, you know, send all your documents early and, you know, we can take it all into consideration.
Thank
Thank you,
you.
Roxana.
Hello, again, sorry.
Seth,
to hog-
yes, go
Yeah,
ahead.
sorry to hog the mic, but it brought up another question from what I was listening to. What about situations where, and this is typical with some of the people who are international students, and then they have the rich uncle back home with the bank accounts to show that. Are they people who can be the joint signers, or how does that work? In other words, I guess our foreign accounts taken into consideration with people who are going to I guess be a co-signer or.
So the applicant themselves should be a US-based persons from like a
Okay.
physical presence standpoint. Now, if the applicant who is applying, who meets that criteria, has a foreign bank account that can just, you know, displays, you know, additional cash reserves, additional cash flow, things like that, can certainly be taken into consideration. That's as long as their name is on the account. It would be difficult to consider an account for a foreign-based person who's not on the loan, even if they have some sort of relationship to the applicant. We'd really need that applicant's name on the account, and that applicant would need to be eligible in terms of kind of being here to apply, I would say. So if it was the applicant's account, we've definitely reviewed foreign bank accounts. They've helped some deals, but it would have to be an applicant. They'd have to be here at the time of applying. If that makes sense.
Thank you, Kyle. Any other questions? Please, we have, I want to be respectful of everyone's time. We did get off to a delayed start due to some technical issues, but I just want to make sure that we're covering everything today, and hopefully This was very informative for everyone here. This was recorded, so we'll be getting that recording out shortly over to you. But any other questions?
No questions. Just want to make a statement. I think it's amazing the type of work that you're doing and the impact that you're making in the community. Your presence and attention here today just solidifies that you have the right tools and the capacity to scale your business. And then the questions that you ask yourself are, are the benchmark days that my sales are outstanding trending in the right direction? And if you find that your cash flow position is tight, then the ability to be able to offer an early payment incentive, which, this is what this program is, really an early payment incentive, just allows for you to prioritize the importance of your accounting practices, managing your cash flow, maximizing your working capital, because you are fundamental to the work that you're doing. And you want to ensure that you have the ability to scale your business so that you can continue to make the impact in the community.
Thank you, Camille. Well, with that being said, thank you so much for your attendance today. We will have additional sessions this winter with topics that I believe will definitely enhance our understanding and partnership with each one of you, and to help you help us close more loans. Because at the end of the day, we want to do as much business as we possibly can to have as much impact and to be on mission here at Capital Good Fund. And the only way we can stay on mission is to have partners like yourself that refer partners to us that we can close, that has an impact on your bottom line when we close it on, and has an impact on that family for years to come, as Camille said. So thank you so much. Have a wonderful rest of your Friday and have a great weekend. And I look forward to our next session and to talking. I know I've emailed a number of you and talked to a number of you as well throughout the time period here. But thank you and have a great day.